saw you dancing in a crowded room. You look so happy when I'm not with you. But then you saw me, caught you by surprise. A single teardrop falling from your eye. I don't know why I ran away. I make you cry when I run away. You could have asked me why I broke a heart. You could have told me that you fell apart. But you walked past me like I wasn't there, and just pretended like you didn't care. I don't know why I ran away. I make you cry when I run away. Take me back, 'cause I wanna stay. Save your tears for another, save your tears for another day.
Welcome. We are back and everything's crashing. Everything is crashing, and I told you all multiple times, the market could go to zero, I'll still be showing up. My job is just to talk about what's going on, and there's a lot going on. Can't say you weren't warned for both Bitcoin and for the market. To be honest though, we'll start off with Bitcoin, we'll talk about the market, we'll talk about individual stocks and whatnot, but like, this was, I think, a sell-off that was very, I wouldn't say predictable, but I don't think anybody should be surprised with what we've seen in the past few days. Maybe the extent and how quick it's happened will be a little bit surprising, but we had a lot of both technical and fundamental catalysts leading up until the last few days of selling. So that's where we're currently at. I'm going to break everything down. I'm going to give you all my thoughts on where we could see. I don't know the future. I can't tell you where the bottom is going to be like right now, but where we could see some life for a little bit. And yeah, make sure to hit the like button and the subscribe button on your way in. Thank you all for your support. What's up, Medi, D, Jeff, Scrooge, Poop, D, Corey, KTF, AK, B Johnson, Keanu Trades in the chat. I Repair, William, Danny, what's up, everybody? Make sure to hit the subscribe button if you're new to the channel. And yeah, we're going to start off with crypto, which horrible day for Bitcoin, down 15%. But this is where you're at. I'm going to be completely honest. I actually thought that Bitcoin was, I mean, it had tested a breakout 4 times, right? And it was holding the support for like a whole entire month. I thought Bitcoin was set up for a breakout to the upside, but that's why you always have to wait for confirmation. It never confirmed the breakout. It retested the bottom of the zone and it broke that huge historical level and it went right down. And this is something I've been warning about for months. I said, you break this 28K zone, you're probably heading to the lower 20s very quickly. I've repeated those words so many times on stream. There's just literally nothing there. The only time you were in that price range was like December and a little bit of January from 2020 to 2021. Like, let's just go back into the past. Between like 20K and I would say 30K, you only spent like a month of price action going straight up. So what happens when you don't consolidate at a price for a long time? You don't have a lot of volume there. Technical analysts cannot find supports on the chart there. It's not going to be a recognizable number for traders emotionally. A lot of people, think, all right, let's just use Apple as an example. All right, 110 on Apple could be a big level because I remember 4 years ago it was at 110, I was buying it there and then it went up. Like things like that, all those emotions can really affect the future on how an asset reacts at any price point. And you just really don't have much between 20K and 30K. So you break under your 30K with a lot of confirmation, you can go straight down to 20 and your next support's around 19.9K from your 2017 bull run highs. So that's where you're currently at. Maybe you if you really want to zoom in, you could try and find like a couple lows and whatnot here, but you can clearly see 19.9K on Bitcoin. It was your high in December of 2020 for a little bit before you eventually broke it. It did act as resistance, right? This acted as resistance in 2020 before it broke above it and went to almost 70K. And this was also your literal huge cycle top in 2017. What if for the first time, right, a level that has been used as a major resistance twice flips into a support? Now that would be very interesting. We are talking about Bitcoin, which is down nearly 70% in just over 200 days, okay? Since November of last year, it's lost 70% of its values from its literal high of all time, but still it's lost that much from where it was not even a year ago. So now you're all the way down here. See if that lines up with any fibs. It's pretty close to your 786 retrace. It's a very key level. That's your next level, right? About 20k. Psychological level. I'm sure a lot of you have already been thinking that. Maybe something random happens here because you are oversold. You are, you know, literally at your lowest RSI since January, but that's the next level. Resistance, maybe a little bit around 25k from this little scam wick in the beginning of May, but really it's 28k. But in between these levels is a level that or in between these two levels for right now is an area where I'm just hands off, all right? I want to see either something like this, or I want to see something like this, like, you know, just some sort of signal other than straight down or straight up, all right? Now moving over to Ethereum, this is very interesting, okay? And this is something I noticed today, from the COVID crash low, and it's crazy, like the COVID crash, literally Ethereum lost 70% of its value in the COVID crash, right? Just think about this for 1 second. Ethereum lost 70% of its value in the COVID crash. It looks like this huge dip on the chart. Let's zoom out. You cannot even tell where the COVID crash is if you zoom out. And now let's go back to your all-time highs, right? It's down about 70%, even more, okay? It's down more than 70% since this all-time highs. So it's definitely took longer than the COVID crash, but the percent move from the high is pretty much about the same. And again, this, you can't even see the COVID crash down here. This you can see clearly, and it's in a much larger structure. You are starting to see this kind of parabolic trend. Like, it's hard to see it. Let's go over to like the monthly or something. It's hard to see it until you go to really high time frames, but this should just tell you what really happened from the COVID crash to the highs. Like, just absolutely insane. And this is where you're at now. Now, all of this price action on Ethereum turned into what? A bullish Gartley, okay? Go to the COVID crash low, trace that up to your all-time high, look for the dip in January of this year. That's around, close to, not perfectly, but around a 618 retrace. And then you're also at you're at a 786 retrace from your COVID crash low to your all-time high. So you have a bullish Gartley here on Ethereum. The B point's a few percent off. Other than that, it looks pretty good. And you're testing the pattern completion zone. This is a almost 3-year long pattern. I guess like 2.5 years or something. It's a huge pattern. The only thing is it's kind of in the middle of two levels. Same thing for Bitcoin. Imagine like you had like some crazy like historical level here. That would be, I would put out a trade setup right now if there was some sort of support here. But you're just, you know, horizontally, you're kind of 831 is your next level of support, and then 1708 was the critical support we were talking about just a few nights ago that it broke under and has sold off ever since. So you had critical supports, you broke them, and that's where you're at for crypto. All right, let's move on to other markets before I talk about the overall stock market really quickly. Wow. So the US 10-year, crazy, is now over 3.3%, and it is breaking out, okay? It's breaking out of a right-angled descending broadening wedge. It's been in for pretty much a decade, over a decade. This is a huge breakout. This is something we talked about for the last couple of months, and it's above the insanely large zone of resistance, okay? So this all started with the bull flag we've been watching for the past few weeks. There was also some hidden bullish divergence, and there you go. It's absolute monster. This was like the best day for in a long time, up 7% in 1 day. That's so far from normal, it's not even funny. So huge day for the US 10-year today. Let's move over to metals. Gold, large bearish engulfing candle today. And it's crazy, we have this environment with inflation, Bitcoin going down a lot, gold going down a lot, stocks going down a lot, the dollar itself losing its value. We're just kind of in like a little bit of a short-term everything crash. I mean, you got bonds doing their thing, but I'm sure most retail people aren't really too concerned with that. So it's just crazy to see like pretty much all the retail asset classes. I'm not too familiar with real estate, but just kind of everything at the same time getting hit. I mean, there's only been a few times in this century that we've seen that. So we're in it right now. We're in the movie that they're probably going to be making in the future about whatever economic collapse or whatever you want to call this. We had the CPI numbers come out Friday. On Wednesday of this week, we're going to be having the FOMC meeting. Powell's going to be speaking, I believe, as well. So just a lot going on for sure. And yeah, looking at gold, major bearish engulfing candle, broke under the 200-day moving average, hidden bearish divergence. I mean, I think out of all things in this type of environment that gold should be showing bullish variables. Fact of the matter is it's not. I mean, that's a bear flag, bearish divergence, bearish engulfing candle. There's so many different bearish terms. That's where you're currently at. Moving on to silver, anything? Same thing, confirmed hidden bearish divergence, bearish engulfing candle, breaking down from a support. They're losing it right now. And who knows, maybe that changes, but for right now, they're losing it. And what's not? Dollar currency index going absolutely crazy. And I've been comparing this to the US 10-year for the past couple weeks. Very similar bull flags with hidden bullish divergence. This is breaking above the yearly highs. Let's go over to the weekly. It's your highest price since 2002. So dollar currency index has not been this high since pretty much when I was born. That's crazy. That's where you're at. Next level is 106. Let's see how China's doing. The Hang Seng Index, after a lot of nice days of running, is now starting to roll over a little bit. I probably draw a demand line like that. We'll look at it another day, but that's really where you're at for the market. Move over to the volatility index. We did talk about this going into the CPI numbers. I said, take some caution. All right, you're at a very key level. We just charted this rising wedge and it played out very, very quickly. Okay, so the VIX does have some resistance. It's topped out between 35 and 37-ish pretty much every single time you've been at these lows for the market. Basically, like for the past like 6 months or whatever, the VIX has topped out around this level. So when the VIX gets to this level in the past 6 months, the market has actually seen a short-term bottom. Not like an overall bottom, because we literally made an overall bottom today for another time. I'm not gonna say for the first time, but this, when the VIX gets up to this level, this is where the market tends to see dead cat bounces at least. And when I go over to the S&P 500, remember that, okay? Just remember that. But what else has happened? What else did we talk about last week when I was saying, you know, this all looks like one big bear flag, like everybody's so confused. What's a good potential trade that's showing strong variables and a good reward to risk? What's one of my favorite, I wouldn't say trade ideas, but just charts that has a good amount of variables on it that I shared an alert on in premium, that I talked about on the stream for 2 nights, that I said was like literally like picture perfect and what you should be learning from. Let's do a quick little rewind and let's see what that mysterious name was. Classic bearish divergence on the 4-hour MACD. You overbought here. That's a very clean looking wedge. Let's go over to the 1-hour chart. At your high of the day, had a bearish engulfing candle right over here, and your MACD also flipped to red, and you have some textbook classic bearish divergence where, so you can see it. There's no certain how I drew my reward to risk boxes, putting a stop, and again, this is on the short side trade, putting a stop at 94, which would be well above that 93 level I was talking about earlier. And then some like targets I found where you have a couple days of highs over here, so $90 as a first short target, of gap fills, previous resistances, and Fibonacci is what I'm using for targets. Just like I would do the opposite thing on a long trade, right? I'd be looking for Fibonacci, previous levels of resistance or support, moving averages. I'm doing the same thing but on the short side. Again, that's not financial advice, that's not an official swing or anything, it's just a way for me to visualize what type of a move this can make to the downside if these bearish variables play out. All right, so that was XLE, all right, the energy sector. This is something I was kind of like screaming from the top of a roof or something about last week, of how bearish this chart was looking. I literally drew these lines so you could see the high volume and then the doji candle over there. Also the RSI getting overbought, that was the main thing. But I mean, I don't want to say I called the top, but let's just say the variables on the chart called the top and I identified those variables, all right? But if you did see that clip I just showed you all, pretty much, I mean, you almost hit the final target. But in just a few days, pretty much all of the short side bearish targets have been hit. I shared puts with premium members literally right over here. This is where I shared puts with premium members. And those puts, since I shared them June 8th, just a few days ago, went up like, I think almost 500% since then. And they were swing puts. I said, and I don't really alert swing puts that much anymore because of how crazy the market is. But these were the first swing puts I alerted in a long time that I literally said swing puts. I said it's the 8th. Let's see. Right over here. XLE puts swing idea. These went from $1.18 to much higher today. So that was a nice move. And this is the type of stuff, you know, a lot of people think it's impossible to trade when the market's just going straight down. Maybe you could find something that's not been going straight down and then look for it to potentially reverse. And again, this was all with the idea that all of this could be invalidated if it just went up like this much. Like literally when I was alerting this, all the XLE had to do was go up 2% and that invalidated the whole entire bearish short thesis. But no, it went the direction that you're looking for because the variables were there and risk was managed. Those are the types of trades that in this environment you should be learning from, so you can find a way to make money in such a tough time where gold's going down, silver's going down, Bitcoin's going down, cryptos, NFTs, real estate, stocks, almost everything. These are the types of setups you want to start learning from in a bearish market. What are some textbook bearish setups that you can learn from? Stuff like this, all right? Also, I wanted to do a quick recap on that. Also to pat myself on the back a little bit. But let's move on over to the stock market, okay? And let's, I don't know, pat me on the back a little bit more, maybe. Long-term downtrend. Then you have this bear market rally, but it's kind of like a bear flag. Let me make this a different color. I mean, if we were to flip this over, it would be bullish, right? Look at this. You have this long-term uptrend, then you have this consolidation pullback bull flag, and then if you break out of that, that's so bullish. But it's literally the opposite, okay? After a long turn or long time of selling off, since literally the end of last year, all of this year, had this very quick rally, about 10% on the S&P 500, and bear market rallies tend to happen very quick. They tend to be very extreme. They also tend to give up their highs very quickly after you consolidate, and that's what you've been. So that's my warning for the market this week. Basically, my warning is if you cannot get above 417 on the S&P 500, it looks like just one large bear flag. And it's not just the S&P. The same thing goes for many individual stocks and many other indices, which we're going to look at. All right, so that stream was from, I think, like last Sunday or Monday. Basically, that was my stream before the week even started. So when I said all of that, we were up somewhere around over here, around 410-ish, okay? And I was saying all of it just looked like one big bear flag in a bearish market, a bearish consolidation. And my thesis was going into last week, if the S&P was not able to get above 417, this is like insanely bearish. Like the only way that all this could have been invalidated was if somehow maybe before CPI or something, or with better CPI than we got above 417. And you failed to do that all last week. So you spend, I believe last week was a full week. You spend Monday, Tuesday, Wednesday, Thursday unable to break that resistance. And then you get a bad CPI print on Friday too. And not even that, you broke that level on Thursday, if you remember. It broke under 407. I actually alerted SPY puts on Thursday. It broke that level before CPI. So you had the technical lineup first and then the CPI. And this is where you're at. I mean, a very bearish pattern in a very long, I wouldn't say long term, it's been like 6 months, but like midterm bearish market is going to do something like this. And I believe, like, let's just go from like this high to where we are right now. Like this has got to be like the worst like few days for the market since the COVID crash. I don't know the actual statistics, but I don't remember. I mean, let's just go back over to the daily for a second. I don't remember the last time the S&P, oh, it's not working, fell like 9% in 4 days. So yeah, sold off. And let's talk about where you're at now. So what are my thoughts now? The bear flags have been playing out across the board. We even had the QQQ bear flag. Remember we were talking about the downside break, hook, and go? You got a breakdown, then you back tested the breakdown, and then you really sold off. These were all the things we were talking about last week. But look at where you're at right now, okay? You've broken under your previous lows. And now you have to look for your next levels. That's where you're at, okay? So I do think that, again, 9% in 4 days is a lot. I wouldn't be surprised if we did see a little bit of a relief rally heading into FOMC, which is on Wednesday at 2 o'clock. So whether that's tomorrow afternoon, Wednesday morning, what you might see is, because we're already down so much, you're going to also not only be pricing in that CPI short term, but also the potential for some negative news coming from FOMC. So while that's all been priced in, I think you could see a little bit of dead cat bounce downs heading into FOMC. And then, don't ask me, I don't know what FOMC is going to be like. I don't know how the market's going to react. Maybe we'll talk, not maybe, but we will talk about when we get there. But for right now, my main focus is what could happen between now and then, between now and the FOMC at 2 o'clock. So I do think you're pretty oversold. We are getting some interesting signals. You're at this wedge demand line. I'm sure a lot of you who've been watching the stream for a while know how much I love the high volume acting as lows on the S&P, which it's done beautifully many times before. And then on top of that, mixing that with some lower Bollinger Bands, which you are now back at. So you do have that signal, which has worked pretty well most of the time for almost all the lows in the past couple of years. So lower Bollinger Bands and the high volume, you do have that signal right now with the demand line. You're not really at a historical support level. I'd say 372 is a better level as your lows from last March. I think was a correction. Oh, no, it wasn't. I think for the Nasdaq. I think the Nasdaq was in May. I don't even remember, but yeah, I do think you could see some short-term bouncing in the next couple of days here. I haven't really looked at the lower time frames too much. There's not much to look at here either way. What I can do though is chart this a little bit better. Let me get some levels for all of you to look at. All right, so we've got this gap fill over here around 390. Got this low, we've got that low. It's gap fill. So these are pretty much your 1 hour levels for the S&P 500. Take a screenshot if you want to. These are levels I would keep an eye on. Today, your high of day was pretty much retesting your previous lows of the year, which is pretty interesting. And you did close the day with close to a 1 hour bullish pin bar. I don't think it's textbook. You'd rather want that body to be like over there, kind of, but not too shabby. 15-minute, close to a tweezer bottom. Nice volume towards the end of the day. You could also look at this as a little bit of like a wedge setup going into tomorrow. There's a lot of different ways to look at this on lower time frame. Futures are green right now, which is good. And we'll talk about the intraday price action after I finish my overall analysis for the market. So let's move over to the tech sector, the QQQ. Not a lot of anything right here. You did just fill a gap today at 276, 277. Have that going for you. You still have these upside gaps to fill. It would be really nice if like these, at least if like the first gap filled before the FOMC meeting this week, if we get those first gap fills. But it's a pretty large rally for 1 day, so I don't think it's going to happen unless you get a good FOMC. Maybe it happens during the day, but yeah, let's go around the lower time frames. Start some levels on the Qs. Lower time frame levels on the QQQ. Take a screenshot if you want. Let's move over to small caps. And unlike the S&P, the Nasdaq, the QQQ, which have made new yearly lows and bear market lows, I believe the Russell just barely held. So today, it actually hold its yearly low. It's back to a very key zone, which used to be these pre-COVID highs and resistances. Now it's support. So have that being tested. Not much of any patterns here, but we can check the levels again. All right, those are rough. I'm just doing it really quickly. Those are your levels on the 1 hour for the Russell 2000. Another one kind of showing like this wedge pattern heading into tomorrow. Keep an eye on those intraday. Here in premium, I'm probably going to be talking about them at some point. And then the Nasdaq, very, very underwhelming falling wedge breakout. So you had this falling wedge you were creating for about 4 months, 4.5 months. You broke out of it, you consolidated for a week, and then you dumped again. Like, That's just textbook bear market stuff. Bullish patterns severely underperforming. Nasdaq is testing a key level though. You can see these highs over here and then these lows over here. This is a key level around 10.8K. Keep a very close eye on this. If we zoom out and if we go on the weekly, I want to see what it looks like as well. Your 618 does kind of line up around like this little low at 10.5, but I don't know. It's a little bit of a, we just zoom out. It's really just kind of like a nothing area. Like you could make some lines and do whatever you want, but if we really zoom out, like you are kind of in the, all right. That's your Nasdaq. Probably like extend this at this point. And then finally the ARK ETF. Getting very close to its, and this is another very interesting thing. I mean, for the longest time, we had the ARK ETF and the Russell 2000, small caps, mid caps, growth stocks, heavily underperforming large caps. Like the S&P was making all-time highs while the ARK ETF was like selling off over here. Now we're actually seeing something like the S&P and the Nasdaq already have broken their yearly lows, but something like the ARK ETF and the Russell 2000 haven't. So we are starting to see a little bit of a difference between large cap tech or just large caps in general, defensive names against more speculative post-COVID fun names, if that makes sense. Those types of names that have already been crushed a lot more than the S&P and the Nasdaq, which are only down about halfway back down from the COVID crash. These names have made a full retrace from the COVID crash, and those names are actually short-term, depending on how you look at it, kind of in terms of like where you were, outperforming a little bit, which is interesting, even though they are still selling off, but just interesting. But for the ARK ETF, you've got this gap fill at 40, also 40 is a level, that's resistance, and then 35 is your support. It's your yearly low, but it also lines up with some lows from 2018. So those are the market indices. That's where you're currently at. Let me keep going, keep hitting the like button, keep hitting the subscribe button. Check out the links in the description if you haven't already. Join the Discord, it's free to join. Let me talk about the swings really quickly, which are not doing well. However, we had a nice amount of swings. We had like GameStop 50%, we had AMC like almost 40%, Zoom almost 30%. We had a nice round of swings in the past few weeks, but the ones that weren't able to get to their targets are now kind of rolling over. The forward swing today failed, unfortunately, broke its yearly lows, hit the stop, that simple. The QS swing also failed, same thing, broke its yearly lows, hit the stop, like it just didn't work. There's really no other way to put it. The stop loss has already helped quite a bit because it sold off even more after hitting it. That's where you're currently at. BlackBerry is hanging on by a thread. This closed like 4 cents above the stop today. It's not really testing any key levels apart from maybe the previous supply line. This is again kind of like hanging on by a thread for this swing. And then yeah, the other swings already hit targets. Well, thankfully they hit their targets because now they're heading back down. Almost all of them. So that's really just the environment that you're currently in. Apart from the swings, I didn't alert any swings today, but my only alert today was SPY calls. Yeah, on a day that the S&P 500 was down 4%. My only alert was SPY calls, and they ran 200%. So let me give you all a little bit of a breakdown on what happened there. But yeah, basically on this exact candle that I'm pointing to right now, I alerted SPY calls. That was my only alert today. And on this move up, they were up about 200% at these highs, and this was also a level that I identified before it got there. So let's go take a look at what happened. So it's 11 a.m. and I said SPY super lot of calls, same day expiration. The S&P was down 3.5% at that point. They were 380. Did it even get up to 380? I think it did. Yeah, they got up to 381. So it was out of the money, same day expiration calls. Why did I alert these? The market was going straight down. Literally at the time that I alerted them, you can see it right over here. It hadn't even really started bouncing yet. So why did I just pick this random area to alert calls? Well, we had a little bit of a wedge. We had a MACD crossover. You can't even see the RSI, so it was oversold. On the 15-minute, you had some classic bullish divergence, and this was a key thing to me. Volume was steadily decreasing throughout the day. All right, you were losing selling pressure. You were still selling off, but there wasn't that much selling taking place. There just wasn't no buyers. And then as soon as the buyers started stepping in, Well, you rejected the first breakout attempt, and these calls actually started down like 20%. But I said I was marking them manually, and I never marked them red because I still thought that they could go back up, and that's what they did. So they ended up breaking out of the wedge, and within just like 15 minutes, these were already up 20%, and even more if anybody was scaling in during that original dip I was showing all of you. And then they just ran. I actually charted these levels over here when it was down at 376. You can't see them because my screen cuts it off, but this over here is 378, this is 379, and then this is pretty much where it went up to. Final level I charted was pretty much where it went to. See that right over here. Went up to here. So it was around over here, and this was the final level. Where did I get that level from? This is actually dating back a little bit. It was to your previous lows. So this was your lows. This was your previous year lows. Those acted as resistance today. So yeah, that was pretty much the only alert today. Some SPY calls hit the final level, and it reversed. So it was like an hour and a half trade. Went almost straight up till the final level, and then at the final level it reversed. Can't complain. That was pretty much a recap from today. Let me just look at my watches. Amazon, I'm keeping a close eye on this name. It's testing a very key level. You can see its highs before the COVID crash are now being tested as support for the third time in the past month or so. And it just got split. It's a very interesting reward to risk area. It's a 50-50 whether or not it breaks or it bounces here, but it's still a very clear area where a trader could just set a stop, and if it breaks under, it's a very small loss. Not financial advice, but that's another name on my watch list. Let's see if anything did anything did in can talk. Let's see if anything did something crazy today. I'm just looking around. Let me just give you a little bit of a rundown. Apple was down 4% today. AMD was down 8%. Carnival Cruises was down 10%. NEO was down 12%. NVIDIA was down 8%. RDBX, a lot of people talk about this name. This one's been going crazy. This was up 16%, but a lot more at one point today. American Airlines was down 9%. Travel names were really getting hit today as well. I mean, most names got hit today, but travel names especially. N was down 11%. Wish was down. Coin was down. Both of those were down 11%. So a lot of names, not just red, but really red. So yeah, that's where we're at. That's my update for today. I know the finals are starting in like 10 minutes. So I'm just going to read the chat and hang out with all of you for a little bit. Try and get to 30 likes if you can. I don't know. Meddy's saying XLE banger alert. Thank you, Meddy. IMEI Repair saying XLE puts were amazing. Glad to hear that. AK, we did look at the Bollinger Bands, I believe, on the SPY. Max has made a really good trade on Amazon. Glad to hear that. Shared a Head and Shoulders. I remember that. Yes, I should have brought that up actually. We did. Nice one. Did this Head and Shoulders. I was also just watching that support as well, and then you shared that, and I was like, take another look at it. And yeah, this was. I know Max shared it in the technical trades, I believe. I also shared this in the watches, I think, a little bit after that. But this was a nice little end of the week move. It was up here at 121. I set up the support breaks, could see lower prices quickly, and that support broke, and this is what happened. So I actually I did alert puts here, but I also alerted it's the craziest thing that happened. I don't know if it's still here. There was this little fake out, and this really was a big nail. I wouldn't say nail biter, but I had to pinch myself with this one. Okay, take a look at this. This is something that happened at the end of last week. All right, I was short Amazon this whole entire area. I even alerted Amazon puts that ended up going really nicely. Then guy had a nice gain off of them too, and I switched to calls right over here. It was breaking VWAP, it was breaking this wedge, and yeah. Again, I'll tell you all, I'm not a perfect trader. There's going to be times where the composite operator gets me, and that definitely was a big pinch at the end of last week. But the overall idea still did play out. Would have been my biggest trade in a long time if I just hadn't done it. But I was able to forget that until now. I just reminded myself of it. And this is something of course you want to learn from your lessons as a trader. But if you ever have just like something silly like that, like where it's just like there's no way you could have known, everything's in hindsight, like try your best to like forget it from an emotional standpoint. Like take the analysis from it, take the learnings from it, and how you can improve on it next time. But don't just like sit there for like 2 weeks being like, oh, what if I would have just not switched to calls and I just held my puts? If you start doing that, you're going to start messing up your future trades, and you don't want to do that. But yeah, that's Amazon. CLOV, yeah, I did not look at CLOV. CLOV is in a little bit of a key area. To be honest, like from a textbook level, this will be called like a descending triangle, or even a bearish pennant. It's a bearish triangular formation in a downtrend. The bias for this is to break down from a technical standpoint. I truly hope it doesn't, but I'm just telling you what the bias is. I actually sent this in one of the chats today saying I still won't play puts if this breaks down, just out of respect for CLOV. But yeah, CLOV is testing a very key level. It's in a make or break area. Really no other way to put it. I'm just surprised. I'm surprised that it wasn't able to kind of get out of this consolidation. But also, I mean, look at what the market's done in the past few days. But yeah, down 9% today. Testing all-time lows as we speak, pretty much. Laid back one says just dropped by to say hi and hit the like button. Have to watch replay. Glad to hear that. Thank you for support. Is CLOV considered a triple bottom? If this somehow holds, it is. But I wouldn't really start looking at it as one until it starts doing this, right? Triple bottoms, double bottoms, you can really only confirm them after you start reversing. Otherwise, there's no way you can know other than like a coin flip's chance. Jeff says, LOL, CLOV goes down every day, always, forever, until the end of time. That's what it has done since it hit all-time highs at 28, almost. I mean, apart from the, do I say it? I think you're the one that always brings it up, Jeff, the 50% in 20 days. Apart from that, and maybe a couple others, but one day, you know, every action has an opposite or equal reaction, or whatever that law is, Newton's law. You know, imagine what CLOV's done in the past year, but reverse. I don't know. Hopefully we're there one day. CLOV day will come, but it may take some time. Max is good TA there. Thank you, Max. And likewise. Risky Seed says, Boston CLOV at 211, average, now 502. I'm wishing you the best. But yeah, again, it's a 50-50 whether this holds or whether it bounces, but the reward to risk is there. I mean, again, not financial advice, but like setting a stop, like, you know, 10%, like whatever you put in, if you're able to risk 10% of it, at least you know that like if it breaks that level, like you're under it, and then just set another stop, like not another stop, but like let's say it gets back above it, then you're just like, all right, you're back above, then you're good. So it's like, even if it does have like a fake out or something where it's like, oh, it hits stops and it comes back up, like it's not that much of like an issue to just get back in. Like, you get what I'm saying? It's just at an area where you know that if you really get under this area, it could be a little bit rough, but if you somehow hold it, vice versa. But we'll see what happens. And I want to look at Apple actually. Now 4% is quite a bit for Apple, and it's one of the largest movers of the overall market. So Apple has put in a new yearly low. Let's actually over to the weekly. And I'd say next level for Apple is like 120-ish, honestly. Also look at Fibs maybe. It's testing the 618, but it's kind of breaking it. So yeah, I'd say this is kind of like the next technical level for Apple, the 120s. What happens? Actually, just flip back over to red. The thing is though, like when we do start getting dead cat bounce, which we will at some point. I mean, I don't know if it's gonna be dead cat bounce or a bottom, but when we start reversing, which I promise you, at some point the market will have a green day again. Okay, if the US stock market never has a green day again, I will stop streaming. Okay, but when we have our next green day, it'll be interesting to see if we can start making these moves to fill these gaps, because you have some very large gaps to fill. But again, you gap down so much that it might take some time to fill them, unless we get some really good catalyst from like FOMC or something, but we'll see. So yeah, hit the like button if you don't already, hit the subscribe button. Top races, championships, jinx the entire stock market. Imagine we're just red every day for like eternity now. The stock market just turns into like a Luna or something. Every day it's just losing 99% of its value. Unless a meteor hits the earth like tomorrow or something. But at that point I think the stock market's like the least of our issues, probably. So yeah, let's do some ticker requests. If you want me to look at a stock for you or a crypto for you, anything on TradingView other than like OTCs and like low volume crap. Sorry for saying crap. If you're watching this with your family. But apart from stuff like that, drop it in the chat and I'll take a look. Nothing I say is financial advice. Maxime says, hey guys, being a devil's advocate here, no offense, but why CLOV? Why devote so much time on that ticker? CLOV, I think, one, for me personally, I don't want to speak for everybody else, but for me personally, a lot of you follow me from CLOV, so I just feel like you found me because of CLOV. I might as well cover it. Like there's nothing I lose in covering CLOV. I'm not like sitting here every day saying CLOV is gonna moon tomorrow. It's gonna moon the day after tomorrow. I'm just telling you what I see, and whether it's good or bad, I'm just covering it to cover it. Kind of very similar to Fisker. It's just a very meaningful ticker for the channel. It helped out the channel a lot, helped me out a lot before it started going down nonstop. You know, back in like the first half of last year, there was a lot of great trades on it that were legendary. So that's why I just have a lot of respect for CLOV. And then for a lot of other people here, I think they could say, you know, they love it fundamentally, they're invested in it, and no, it's not the only stock that's down a crazy amount last year. There's a lot of others at this point. That's just me. It's my answer. Did we look at Fisker? I feel like I skipped the ones that I feel like I just really quickly scrolled past them. I didn't really do much analysis. But yeah, Fisker is retesting all-time lows pretty much. It's still in this long-term wedge. It's still heavily shorted. The only question is, when can you start getting a breakout? For me personally, I'm not paying a lot of short-term attention to Fisker until it breaks out of this wedge. Now, hopefully it doesn't do this and then break out. But I mean, actually, that wouldn't be the end of the world for me personally. I'd like to grab some shares down there, not financial advice, but I'm just waiting for a breakout in Fisker. I'm not trying to like catch a falling knife for right now, which it is really right now. But when it starts showing me some sort of variables, I'm sure I'll be talking about it. Maybe if it sells off a little bit more, you get some triple classic bullish divergence, you double bottom, you break out, you get a short squeeze, who knows, like that would all be amazing. But I'm waiting for the variables. A little bit of an inverted hammer today, so that's one variable. Hopefully it can just hold these lows, and if not, definitely hopefully it can hold the demand line of this wedge, which will probably fix a little bit. Alright, so who's winning game 5? Drop your vote in the chat. Poll is up in the chat now. Pizza Boxing, I came because of CLOV. Gunslinger saying CLOV family, we appreciate it. I'm sorry, I can't pronounce it. The Satva. Great alert on SPY call. Missed more gains as I was working. So preset my sales, but always take gains vibes. Appreciate it, and glad to hear that. Starbucks. I've not looked at Polestar in a long time. I've been seeing quite a few Polestars though. And he's going for the Celtics. Looks like it's a very heavy, not a lot of votes, but 83% Celtics, okay. All right, let's get started. CVX, that's a rising wedge breakdown today. I'd say 155-ish, like 150. Like this little zone is kind of like the next support area I see. You know, maybe it holds some of these random lows, I don't know. but that's really what I'm seeing here. Also kind of had like some classic bearish divergence at those highs as well on both oscillators. So like it's already kind of selling off. In hindsight, I'm saying it's bearish because it was really bearish over here. I mean, that's a rising wedge, bearish divergence, hanging man candle. Like this is like literally right here is like textbook bearishness, but it's already been selling off. So at this point, it's like how much further is it going to drop? I don't know. Those are some levels. And then resistance, you've got some around 174-ish. ALLO. Not a lot can be done here. It's literally right in between two levels. I have no clue. It's my analysis, unfortunately. Sometimes I just don't know. Well, I never really know for sure, but sometimes I just don't know at all. FUBO making new lows. That's kind of like a bearish pennant breakdown. There's nothing here. Hidden bearish divergence. I think it might just depend on the overall market more than anything else, unless there's some catalyst. But you know, broke out of this longer term downtrend and then sold off again. Like it's just really crazy to see some of these moves. But I think it needs more time to tell like what the pattern is turning into. SBUX, it's back testing a wedge breakout in a very key support level. I think it's a very key make or break area for SBUX. Got gap fills. There's some insider buying activity, I think from like the CEO or something. Let's see. It's the interim CEO, May 10 and May 12th. Bought like $10 million and then like almost $15 million, I think, dollars worth of shares or something. Go look at it yourself. Want to fact check me. And then a couple cryptos. Go back and watch what I said about Bitcoin and Ethereum at the beginning of the stream. That's definitely the first thing. Apart from that, do it like this. It's AVAX. A wedge, but you know, a lot of people think like you draw a falling wedge, oh my gosh, it's about to moon tomorrow. Wedges, I mean, it's been in a wedge for a long time and it's just gone straight down. So again, like it's not at the end of the wedge, it's not breaking out, it's just in a part of a wedge right now. Very high volume though. And apart from that, I'm not really sure. There's not much of any levels here. Sol, it's pretty similar. Testing a supply line, or rejected the supply line. Also another name, just like a wedge. I don't know if there's any levels here. Actually, yeah, around, not here, but really in this whole entire 18 to 22 zone, you have a lot of support potentially. I mean, see if it acts as support, but historically you do. And then GGPI, like it broke out and then just sold off again. Another name is doing that. Maybe it's testing another breakout. Maybe how you could look at it, but it's not really at a horizontal level either. And then these will probably be the final two, BIMI, SOFI. Yeah, BIMI down 17% today. I really can't chart this. I'm gonna be honest, it's been going straight down. I don't think this is something where like TA means much on, just a very choppy chart. SOFI ended up filling this gap after breaking down from that support level. Lows are $5, or a little bit under 5. Let's hope it holds that. If it doesn't hold that, then you know the deal, Medi. There's nothing under it. So hopefully it holds that. Close to a bullish pin bar today, kind of similar to the SPY. Maybe does fill this gap like short term to the upside if the market gets a little bit of a bounce in the next couple of days. And, bullish bat, pretty close to bullish bat. And on top of that, on the 4 hours, some hidden bullish divergence. Bullish bat, hidden bullish divergence. 4 hour. That's where you're at. Thank you for watching the stream. Hit the like button, hit the subscribe button. Bitcoin's, oh my gosh, it's down even more. Wow. It's at like 23, I think, when I started streaming. It's at 21.5. You're making yearly lows for Bitcoin as we speak. 21.5K. 21.5K. Getting close to testing for the first time ever. 2017 cycle top high. The last time you were at these prices, it was insane. Not the last time you were at these prices, but like 5 years ago when we were at these prices, and it was like this crazy, like super, I think it was really the first time Bitcoin was like, I would say mass adopted by the media. I wouldn't say mass adopted by society, but by the media. Like you go on CNBC, and it was like really the first time CNBC and all these other financial outlets were talking about Bitcoin. I'm sure a lot of you remember it in 2017. That's literally what got me into trading in general. But when you were there in 2017, that was like thousands of percents of gains for so many people. Peak euphoria, literally the top. Everybody's partying. So many new millionaires were created. A whole entire new asset class was being defined. It was leading the way for all these altcoins to go on some crazy runs as well. That's the vibes you were at when you were at these prices 5 years ago. Now you're at these prices, and you're probably getting a lot of people applying to McDonald's. I'm sure a lot of you have seen those crypto memes, and it's peak fear. It's peak fear. So you're at the same price you were 5 years ago, but it's changed from the peak euphoria to peak fear. Will that mean, or could that turn into a previous resistance flipping into a support? Find out next time on the next episode of Late Night Vibes with Champion Vibe, which never includes financial advice. And join the Discord. Have a good night.
I saw you dancing in a crowded room. You look so happy when I'm not with you. But then you saw me, caught you by surprise. A single teardrop falling from your eye. I don't know why I ran away. I make you cry when I run away. You could have asked me why I broke a heart. You could have told me that you fell apart. But you walked past me like I wasn't there, and just pretended like you didn't care. I don't know why I ran away. I make you cry when I run away. Take me back, cause I wanna stay. Save your tears for another. Save your tears for another day. Save your tears for another day. I made you think that I would always stay. I said some things that I should never say. I broke your heart like someone did to mine. Now you won't love me for a second time. I don't know why I ran away. I make you cry when I run away. Take me back, cause I wanna stay. Save your tears for another. I realize that I'm much too late.